India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. And as you can see, we are back in our normal studios. And I think and I hope and I reckon that perhaps we are going to be in a bit of a normal kind of a market as well. Because the last 3 days have anything been but normal. Monday, a 3% rally. Tuesday, a 6% fall. And yesterday, a 3% bounce back once again. So, on to more normal kind of markets. I'm Prashant. With me, my colleagues, Nigel and Surabhi. Guys, hi, good morning.
Hi, morning, Prashant. The morning, Nigel. I hadn't been on a roller coaster in a while. It's been many years, right, since I went to the amusement park. I think this week pretty much did it for me.
Well, what about overnight cues? Nvidia going from strength to strength.
Amazing.
$3 trillion of market capitalization. Wow.
Trillion with a T. Huh?
3 trillion.
Trillion.
Yeah.
I mean, you've got to say it again and again.
Absolutely.
That's 60% of our market capitalization.
It's just like amazing, right? And we'll talk more about this because it's a phenomenon. It used to be Tesla in 2021, and that was kind of the leader for the entire pack there. Now it's, of course, Nvidia and what's happening. But let's begin with, where we should, which is, of course, where we left off yesterday and run you through a few things. So a big bounce, as I said, 3% rally, 6% fall, 3% rally, which means Friday to, yesterday's close, you're essentially, the returns are zero. On the Nifty, if you bought Nifty spot contract, which you can't, but if you bought it and then you kind of looked at it yesterday, at close at 330, nothing. But with yesterday's bounce, it means that the Nifty has now recovered about 50% of Tuesday's losses. Now, I don't usually look at the flows so closely on a day-to-day basis, but because we've had such large days and such large numbers as well, here is a quick look. 5,600 is what FII sold yesterday, and the locals were the ones which did the buying, 4,500 crores in cash. So it almost netted each other out, but the point is FIIs are still not back. They were back for that one day on Monday, but then after that, not really. DIIs thankfully are back because DIIs sold about 3,000 crores on Tuesday after that election verdict, where they're back on the buying side. On the index futures, positioning is still short. A little bit of covering, but from 3.55 lakh contracts, now we're down to about 3.1 lakh contracts. So it's still a large net short position as far as index futures are concerned. Yesterday, of course, we got clarity that it is, of course, going to be Prime Minister Modi for a third term. It's going to be the NDA. And that those sound bites sort of kept, I think, giving one leg after another up for the market, which is, of course, started with Chandrababu Naidu saying that statement which came at about 11 in the morning saying, I'm firmly with the NDA. And, of course, then later there was the NDA meeting itself, everybody rallying behind Mr. Modi for being the Prime Minister for the third term. And there was, of course, that photo opportunity as well, right? With Mr. Naidu, Mr. Nitish Kumar, and, of course, the rest of the senior leadership as far as the NDA is concerned. So I think in that context, there is more a sense of, more settled kind of feeling that the shock is out of the way. It's going to be perhaps a stable government, and that is essentially what the market would like to see. But now, from here on, there is a few other things, right? So the swearing in is on the 8th, which is a Saturday. And markets will closely track the, what ministries are likely to go to allies like the TDP and the JDU. More than the TDP, the JDU, right? Mr. Naidu, of course, has been business-facing, is liked by corporate India. Mr. Nitish Kumar, we'll have to see. Is it possible that the railways is a ministry which the JDU gets or something else? It has implications for specific sectors, etc. So we'll talk more about that as we get to know this. And I think this is going to be top of the mind once again. Now, overnight, we've seen a big move, and it's a very positive move. Nasdaq is up. Nasdaq futures have crossed, the Nasdaq 100 futures have crossed the 19,000 mark. And the equity close also, Nasdaq was up 2%, the S&P was up about 1.18%. Yields continue to fall 5 basis points again, which means that the 10-year benchmark in the US, the yields have fallen 25 basis points in the last 3 sessions. That is very large. Markets have ignored it. I mean, things like IT services here, even metals. Metals had a big rally, but the fact is dollar is weakened to 104.5. Yields are falling in this way, which essentially, and by the way, all of this in the US is happening because growth is coming in. Labor market growth is coming in weaker. We had one data point on Tuesday, and last night, once again, we had the ADP data, the private payrolls, and then you also had the ISM services, the labor component, which weakened. So, you know, this has, of course, got implications for interest rates and specific sectors here. IT, metals come to my mind, top of the list there. Now, if as far as levels, etc. are concerned, we are very close, and we're going to put out very near-term levels because we've had a big move, and it's very unlikely on a day-to-day basis you have these 3% rallies, right? We kind of course-corrected a little bit, and now we're in a more neutralish kind of zone. So the Nifty now needs to decisively close about 22,640. We're there. It's 20 points away. But that's the level I would watch on a decisive kind of basis for further up move. Supports come in at about 22,400. That's the 40-hourly average. And on the Nifty Bank, similarly, on the upside, on the upside, the level basically is a retracement of the fall, the two-day fall. 49,414. Again, very close by. We left off at about 49,050. And support comes in at the hourly average, which is about 48,390. More normal markets, I think that is what we would like to see. The GIFT Nifty will come up on your screen to indicate a start. A 90-point higher start. We'll see if we get that and if we actually sustain that. Guys.
Yeah, Prashant, not much more to add. I'll just fill in some of the data points that you referred to, which is why Wall Street was obviously higher. NVIDIA, of course, was the big story that powered the Nasdaq up to fresh highs. The S&P 500 was also sort of taking on fresh high levels. And NVIDIA did become the second company only after Microsoft in terms of market capitalization in the US with that big $3 trillion market cap move. Now, in terms of the data points, just to tell you the numbers, because this is something the market's tracking, this ADP report, the miss was quite a bit. The numbers came in at 152,000. This is the May private payrolls that were reported yesterday. The estimate was 175,000. It's a big miss over there. And the dollar instead decided to react to a more positive cue, which was on the services data. So the ISM non-manufacturing PMI shot up to 53.8. It's a pretty high level, and I think it was the highest since last August. So almost, 8-9 month high on that number as well. So the dollar was reacting to that, but the bond market was quite happy with the slightly weakish numbers coming in from the labor market. Remember, all eyes, obviously, the big one is the non-farm payrolls report, which comes out on Friday. And then it's all about, looking out to the Fed, which is not expected to cut, but still, the hope and expectation is that maybe they will at least deliver that one rate cut or maybe two in best case scenario this year itself. Speaking of rate cuts, the ECB may be first off the ground, and all eyes on the European Central Bank today. They are meeting, and the expectation is that they'll start off the rate cut sort of cycle, and it will be the first cut since 2019 if the ECB delivers. So that's something that global bond markets are also watching out for. As Prashant mentioned, we've got, of course, lots of selling in the cash market. So if you were looking forward to some sense of confidence that FIs are buying the dip, not in cash, that wasn't the case. After a sell of almost 6,400 crores on, result day, yesterday there was another massive sell number of 5,600 odd crores. Of course, a lot of it was offset by DIs. DIs, remember, sold on the 4th of June, but they were again buyers yesterday. There is some short covering in the F&O market, but the cash buying is absolutely not visible by the FPI community. The index has closed above at least, in the rebound yesterday, so 20 DMA, 50 DMA. It's taken that out. But for me, the main question is what happens from here on? Now that the rebound is over and done and we're back on even ground, does the market get into a consolidation patch? Or do people start taking early positioning, pre-budget positioning once the swearing-in happens and, trying to second-guess every single statement that's being made on the tilt or the shift in terms of policy, if at all. The FMCG index, by the way, just saying after all the rally, and we were speaking about this big, double-digit moves yesterday, it's still flat. 1 year on, the FMCG index is at the index level is absolutely flat. So we'll have to see if that buying continues. But also, Nigel, I guess even if the FMCG buying continues, for the index to move higher, we'll need more. We'll need banks. We'll need some of the big boys to participate as well.
Well, that's right. That's spot on, right? Because the weightage on the index itself is quite muted. And I'll be interested to see whether or not the ECB follows the Bank of Canada. Yesterday, they went ahead and they cut rates by close to 25 basis points out. So we'll keep an eye out on that global cue. But let's run you through the top cues that I'm looking at. Well, in terms of the FI action, yesterday they sold in the cash market, but they covered some mild futures in the F&O basket as well. And we did have a good trading session yesterday. Part of it could be that the Nifty Bank played out its weekly expiry. Today, all eyes will be on the Nifty because that has the weekly options expiry that plays out. And before we get to the flows, just one more factor that I wanted to highlight is in the last few sessions, last 2-3 sessions on, you've seen that some of these promoter entities are coming in there and they're chipping in yet again. I don't want to highlight any companies as of now, but I went through a list and some of them, whether it's 5 crores, 10 crores, whether it's 0.2, 0.3% odd, that's actually taken place even in the last 2 sessions odd. So I'll keep an eye out on this promoter activity besides the institutional flows. But talking about the institutional flows, well, yesterday if I net out the DI and the FI number together, it was at around 1,100 crores odd. Remember, when it goes to that 1,500, 2,000 crores odd, then you see the markets coming under selling pressure. So till around 1,000 crores, put in there some retail money, you're able to hold this market higher. So that's one number I'm looking at. What do the FIs do? As I said earlier, they added long positions, close to 20,000 contracts. They covered close to around 20,000 contracts as well. So the swing factor out there is close to 40,000 contracts. The net short positions are at around 83%. And in absolute terms, from around 3.55 lakh contracts, the swing factor is around 40,000 contracts. So that's why the net short at around 3.11 lakh contracts. But as I've been highlighting for the last few days, it's not just the FI data. We're looking at the clients. That's a large HNI as well as retail out there. And in yesterday's trading session, well, they took some money off the table. So they're still very much net long, 2.5 lakh contracts on the long side, combating the FI net short positions. But yesterday, that long positioning came down a little bit in trade. Getting to the levels then, well, the Nifty, yesterday's close is very encouraging. We ended at around this 22,620. And why is it encouraging? Because we had a high, and then we came off close to around 2,100 points approximately. With this pullback that we saw yesterday, we have retraced close to around 66% of the fall that we saw in that, in those 2 sessions. So that's a good close that we saw. You'll want to build on from here on. The other levels that we're looking at, the 20 and the 50 DMA for reference, both on the Nifty as well as the Nifty Bank. So that's important. On the downside, you don't want the 22,400 odd mark to break. The GIFT Nifty is suggesting we open up with close to around 90 points odd. If this market's not for the faint-hearted, so some kind of taking some money off the table in the near term. This market is headed for much higher levels, in the months to come and the years to come. But just, if you're making some money, you bought the dip and you're getting a 100-point pop, maybe taking some money off the table may not be such a bad thing.
Okay, all right. Nigel, thanks for all those cues. Let's get started then with the equity call of the morning. We've got Rhythm Desai of Morgan Stanley with this note. He's expecting macro stability to continue to inform policy, and he sees structural reforms driving a 20% earnings CAGR and annual compounding of the sensex at 12 to 15% over the next 5 years. He says the BJP-led NDA is set to form a majority government for a 3rd term, and they forecast GDP growth of 6.8% in the current fiscal, with headline CPI decelerating to 4.5% on average. He says their earnings growth forecast throughout FY26 remains 500 basis points higher than consensus, and the 12-month forward BSE Sensex target is 82,000, implying a 14% upside from current levels.
Okay, well, there's Rhythm Desai. Let's get Lawrence Belanco of CLSA in as well. He says that focusing on the daily chart of the Nifty, he sees initial support provided by the lower boundary of the March to May trading range at the 21,700 to 21,735 area, followed by the 200-day moving average, and then the September 2023 high, which comes in at the 20,223 area. He says September 2023 high and the 200-day moving average should provide support where the Nifty can stabilize and start a recovery and some consolidation pattern from there.
Okay, let's get you some money market views as well now. Parul Mittal Sinha of Standard Chartered Bank says the USD INR pair traded in a relatively narrow range of 83.10 to 83.65 in the past week, as intervention by local banks helped smoothen the volatility. She says FPI flows would be key in the near term as the market closely watches for the likely policies of the new government. However, she's expecting the pair to trade in a narrow range in the near term as well, driven by intervention by local banks on either side, expecting the USD INR to be in a band of 83.20 to 83.60 for now.
On bonds, we've got Parul coming in and saying that bond yields moved sharply higher on Tuesday after the unexpected election results raised worries of fiscal deviation and the consolidation path. Yields are slowly drifting lower to pre-election levels on formation of a likely stable coalition government led by the BJP. She continues to expect policy stability. She adds MPC outcome is a key event in the near term where the MPC is likely to keep repo rate stance unchanged. 10-year, according to her, should be in a range of between 6.95 to 7.05%.
Okay, we have a lot of stock-specific action to track for you. We get to that in greater detail in just a bit. But for the time being, I'll run you through our top 10 list that we're looking at. CG Power, BHAL, IEX, Century Textiles, Torrent Pharma, all of them will be reacting to positive news flow. Add to the list Uno Minda, RVNL, HAL, and KPI Green. The lone stock that will be reacting to negative news flow is Trident for today's session.